It appears that President Trump is on the cusp of losing the consumer. What do I mean by that? Well, folks, in the last 3 or 4 business days, we have seen some early indications of some economic reports that the momentum, the surge that President Trump enjoyed in his first month in office may be petering out. This is something that we need to pay attention to because, as you know, the consumer drives the economy. Now, also, we need to remember that future expectations sometimes don't come to be. So, again, these are early indications of what is coming. On Friday, again, we had a pretty horrible services report. Again, services make up about 70% of the economy, rough and tough, showing contraction. Today, we got a pretty horrific consumer confidence report where last month it had jumped or ballooned to 104. It was expected to come in slightly to 102.5, but it collapsed all the way to 98, 98.3 to be specific. So what is really going on? I believe what is happening right now is, frankly, President Trump is losing the messaging battle. And again, consumer psychology is always fragile. And I don't think it's unrealistic to say that the first 5-6 weeks of the presidency have been chaotic, have been noisy, have been filled with daily executive orders and messaging. And if you just step back for a moment and ask yourself, what is the ordinary U.S. consumer hearing, seeing, and feeling? Well, first and foremost, they're obviously still feeling inflation, right? Inflation hasn't magically disappeared in 5 or 6 weeks. So that's still there. They've undoubtedly seen egg prices at the grocery store go bananas. They have heard, at least on the periphery, about tariffs. And I would assume that the average consumer equates tariffs with higher prices, aka more inflation. We still have a broken housing market that hasn't magically fixed. We have, a large swath of, jobs being cut, layoffs. And again, layoffs may not affect the average American, but again, when they occur, certainly en masse, there is a ripple effect. So again, this could all change. This is probably part of the plan. You can't go in and make all these changes and not expect some consumers to be leery. But it is a risk. It is a risk. If enough consumers turn cautious, consumers can cause a recession all by themselves. It doesn't take a lot, right? If half our consumer base decides to put away the credit card, you'll see a recession all by itself. Also, I think something else that is going up behind the scenes is the market may be starting to price in the true threat of stagflation. Stagflation is the boogeyman to the Fed. It is a low growth, high inflation environment where the Fed tools are frankly ineffective. The Fed tools can help jobs or help inflation, not both. So there's a real threat of that. In fact, Treasury Secretary Bassett, Trump's man, said that the U.S. economy is brittle underneath due to excessive spending by the past administration. I would agree. I think there are lots of reports showing that the U.S. economy is brittle. And I think that is a good word to use. Stagflation, again, is a real threat. I think we're going to talk to Anna Kelly about that today, so we'll get more details on a upcoming video. But again, low growth, stubborn inflation. We're going to find out on Friday. There is still a lot of hope that the third and final inflation reading for September is a nice surprise. Again, it is expected to be moving 0.2, both on headline and core. Anything less than that, even a drop of 0.1, which is half the expected, could certainly prove to be a problem. I do want to highlight that I do believe that President Trump is focused on something very different than the first administration. I believe in the first administration, it was well reported that President Trump was fascinated or followed or judged his presidency by the stock market, right? The stock market's going up. I'm doing a good job. I believe in this current presidency, certainly in the first year, that he's not looking at the stock market. He's actually looking at the 10-year note. I believe he understands, Bassett understands that the 10-year note drives lending, housing, cars, businesses. And I believe that is where their focus is. Their focus is getting the 10-year note down. And I don't know if you've noticed, but the 10-year note is down monster today. So part of how you get the 10-year note down is obviously you continue to lower inflation, you lower your oil, but also you pull back a little on expectations. That is what is going on. So again, the 10-year note is down big today. I think it's down 0.8 or 0.088 basis points. I would expect the mortgage rates to come into, gosh, you could see a 30-year mortgage rate today with a low 6.8, possibly 6.79. I mean, mortgage rates are falling. Mortgage rates are meaningfully below 7%. So again, this is something that we have to watch. We did get some earnings today. The big one from Home Depot. Home Depot again is really highlighting that the housing market is still frozen. I, of course, say the housing market is broken. CFO of Home Depot says the housing market is frozen because of mortgage rates. Consumers will gradually get used to higher rates and before they fall. So again, this is something we are starting to see. Mortgage rates today are actually below where they were a year ago. I don't think a lot of people realize that. And for the first time in 8 quarters, so 2 years, Home Depot had a comparable sales that rose. They had 8 quarters in a row of same-store sales falling. This comparable was up 0.8%. Another earnings that was ugly, just ugly, and the expectations were even more ugly, was Krispy Kreme. I don't even remember the last time I had a Krispy Kreme donut. It's probably been 2 decades plus. But they missed on top line, missed on bottom line, and had horrible guidance. I suspect that Krispy Kreme is feeling the full weight of GLP-1s. Again, GLP-1s are being highly used by folks to lose weight, and I suspect Krispy Kreme is taking it on the chin. We also got a horrible Philadelphia Fed services survey. Again, this is a problem. Consumer confidence weakening, services weakening. This is a problem. Philadelphia Fed survey tumbled from a expected 2.2, so expansion, to a negative 12.9. Again, don't worry about the numbers. Worry about the miss, and their trajectory. Don't know if you saw this, but Bitcoin is crashing. I haven't checked it in the last few minutes, but Bitcoin was under 87,000. I think it was like 108 just a couple weeks ago. Bitcoin is now down 20%, so it is in a correction. So again, it looks like we are headed into a risk off. People are probably being liquidated. I still don't understand why people go buy Bitcoin on margin. It just seems so silly to me, but hey, when are they going to learn? Lance Lambert always putting out the amazing housing stats. As of right now, at least in the last report, there are 31 of the large housing markets that are declining. 31 markets are declining. What I found interesting, we'll give you the range first, and then we'll give you some facts that I thought were interesting. Of the 31 markets that are declining, Punta Gorda, Florida, has the largest decline at negative 8.2. And the smallest decline, so this again is the range from biggest to smallest, is Tucson. Tucson, Arizona comes in with a negative 0.3. Negative 0.3. Interestingly enough, folks, did you know a little bit over half of all 31 markets that are falling are in Florida? In fact, 17 of the 31 markets are in Florida. 7 of the 31 markets are in Texas. So if you put those two together, you have 24 out of the 31 markets that are falling are either in Florida or Texas. Thought that was pretty interesting. We did get another earnings that I failed to mention earlier. Hims and Hers Health. They both they beat on top line and bottom line with revenue up 95% year on year. However, they missed on margin. What is margin? Margin is the profit. You sell a widget for $1, it costs you 80 cents. Your margin is 20 cents. Margin was lower than expected. Also, they highlighted that they may stop selling some weight loss drugs. So again, Hims and Hers are taking it on the teeth today. Don't know if you saw this, but we do have a major central bank cutting. Yes, Bank of Korea has cut rates. They've cut rates 3 out of the last 4 meetings. It is interesting. The world was on a rate hiking cycle seemingly yesterday. We now have some central banks cutting. So it will be interesting where we go from here. I do want to thank you for joining our school community. Again, the school community, one rental at a time, is amazing. It is the place you have to be if you're starting real estate, want to get in. You got to get around people that are doing the work. We had 3 people join yesterday. We had Quan, Mitch, and Tom. Again, make sure you introduce yourself. You unlock all of those free goodies at level 2 and level 3. Also want to remind you that we have 6 masterminds or groups that meet weekly. In fact, today in about 10 or 15 minutes, if you are a real estate agent, real estate broker involved in the real estate business, there is a mastermind just for you that goes off at 8 a.m. Pacific on Tuesdays. Don't know if you saw this, but Palantir's down 25% the last 5 days. I do want to give Tom Nash a shout out. Tom Nash was on the channel 2 weeks ago and actually said it would not surprise him if Palantir fell 50%. Wise words, Tom. Again, dollar cost average and all of that is where his mind is at in this. I do think it was interesting timing to bring that to be. We do have some Fed speak. We got Fed President Goolsbee. It is best to wait and see on Trump policies. Again, we do have President Trump saying that Mexico and Canada tariffs will go into effect next week. Again, is that negotiation? Is it coming? We shall see. My wild ass guess is it's just more negotiation. In fact, President of Mexico has come out and said that she expects to have an agreement sometime in the next week on tariffs. So again, negotiation, reality, we shall see. But again, back to the opening message. If President Trump could be losing the consumer, telling the average consumer who gets, this much of the economy, tariffs are coming, tariffs are coming, tariffs are coming. Tariffs on cars, $6,000, tariffs on houses, $8,000. The consumer is going to hear and feel that. Again, he could be losing the consumer. JP Morgan CEO, good old Jamie Dimon, says the consumers are kind of back. Almost like going back to normal. That's not the usual eloquent Mr. Dimon, but basically saying that the consumers are spending. Anything else to talk about here? Let me take a quick look. Oh, yeah, Case-Shiller. We got home price again. This is such old data to me. This is December of 2024. It's interesting to data nerds like me because it will be what shows up on the year-on-year charts. But Case-Shiller was up 4.48 for the 20-city index. Anything else to highlight here? Oh, yeah, let's do one more thing. 2 more things, actually. Minimum salary needed to be in the upper middle class. Thought this was interesting. In 5 states, California, Hawaii, Massachusetts, New Jersey, and Maryland. Maryland, you need to make over $153,000. New Jersey, $151,000. Massachusetts, $150,000. Hawaii, $147,000. And California, $142,000. Make more than that, you can be considered in the upper middle class. And then finally, we will talk about Bill Smead, who has been a Warren Buffett follower for decades. He indicated after Warren Buffett's record haul of cash, $337 billion, him selling more and more stock, that Warren Buffett could be waiting on the sidelines for a wild swing to the downside in the stock market. Again, based on the Warren Buffett index, stocks are highly valued. But Bill Smead says that Buffett could be just doing what he always does, sitting patiently, waiting for his pitch. Folks, again, I believe President Trump is focused on the 10-year note, not the stock market. The 10-year note has been on a precipitous drop the last week or so. I do believe that President Trump could be losing at least the battle for consumers, given the noise. He will likely win the war on rates, so there is a bigger game afoot. But yes, the consumer can cause a recession all by themselves. Folks, do me a favor, like, subscribe, be a part of the community. If you are interested in real estate and you don't have any friends, join my school community. You're going to have 300 plus individuals going in the same direction. 6 different mastermind groups to join, thousands of dollars in free education at level 2 and level 3. I hope to see you there. Take care. Bye.